Welcome. This is Bitcoin Day Trading, Elliott Wave, episode number 8. As I'm speaking, the bullish scenario should break and a bearish scenario should go into play. So I'm going to talk about the bullish case today and also an alternative count. So it will be quite difficult because you have to understand both of those counts and they are both on the same chart. So it could be a little confusing, but I'll try to get you to it and so that you understand the bullish as well as the bearish count. First, we have to take a look at my website because I have to show you my disclaimer. We'll do that right now. Here you have my disclaimer. Please read it, and also the risk warning, because trading is risky business, especially if you don't know what you're doing. If you have no trading system, no entry points, no exit points, then no stop loss, then it will be extremely risky business. I mean, it's not risky business. You simply will lose all your money. That's plain easy it is. If you need some help, I do one-on-one coaching, and right now I have a discount of 60% if you're interested. So don't hesitate to reach out to me. And now we are going to take a look at the bullish case scenario, if it's still in play or if it's already over, and for the 3-minute chart. And then we'll look on the higher time frame chart, as well as the bullish case, then the bearish case. But let's start with the 3-minute chart. So right now, we are still, the bullish case is still in play because our level here, both of them have not been violated. But as you can see, we are really close to it and we could easily violate both of them. In that case, what you see on this chart will no longer be valid because it cannot be a wave 1, 2, and we are expecting a wave 3 higher and so on. That cannot be the case anymore. And the wave 3 cannot subdivide into a 1, 2. Well, here I still put 2 if that is violated. So what I can already do is move over that count and put the 5 here. And the wave C here, and that wave here, and wave 2 here. So in case we don't go any lower and we go higher from here, then that what you see on this chart would be in play. But let me count. So 1, 2, 1, 2. 1, 2, 3, 4, 5, 4, 1, 2, 3. Well, I think it will be violated. That doesn't look like the end of it. The fifth wave makes here should violate. It should subdivide into 5 waves, and right now I only see 2 waves in it. So I don't think that is the end of the 5th wave. So I think that both of those levels will break. And the 40,800 and the 40,693. I think that both of them will break, and I don't think that what you see is in play. Actually, I have to relabel all this for my next intervention. I won't do it live because it takes some time, and I don't want to bore you to annoy you to death. So I won't do it live, but I'll have to relabel all this as soon as both of those levels get violated. And I think they will right now. It looks to me as if they will, because I don't see this being the bottom here. I just don't see it. So I think we're going to take a look later on the chart before I'm finished, and I think both of those levels will get violated. And then there's no wave 1 no wave 2 here, not subwave 1 and not a subwave 2. All that is wrong as soon as both those levels get violated. So that's it for the 3-minute chart. And now let's look at the 3-hour chart. On the 3-hour chart, I still have my favorite count, which is the bullish case scenario in place. So we had wave 1, and I did put a wave 2 down here. Okay, but now and the wave 2 did subdivide into an A, B, C, and I put the C wave here. Here, the level that should not be violated is 39,573. If that level won't get violated, the bullish case scenario could still be in play. Okay, if that level gets violated, then we have to look for a bearish scenario, and I did put the bearish scenario also in that case, but just for the bullish scenario. So that would be here where you would have wave 2, and then we start wave 1. I did put the 2 here, but maybe it should be put over to the right somewhere. Then you get wave 3, 4, and somewhere up there, wave 5. That's the bullish case scenario. But the probability, since price keeps dropping, the probability that bearish scenario is in play is high right now. It's really high. So as long as that level holds, I'll go for the bullish. I'll keep the bullish case scenario my favorite place, but as soon as that level breaks, my alternate count will get in play. And the alternate count would be that this first wave down here, wave A, which in the bullish case scenario is wave A, is actually a double V. Then we get an X wave, and now we are accomplishing a C wave. So I put L count. Okay, and the C wave that subdivides into an A, B, and C. So you can see an A, B, and C. And how did I get that target here, the 36,869? I did get the target because I think that we could be doing a triangle, and the triangle would be A, B, C, D, E, and then you get a thrust down. And the thrust is calculated by having the start of wave A up to the top of the triangle, okay, and then the end of the wave E, let's say it ends here, down. So both of them are actually equal in size, okay, and that would be your thrust down. My rectangles don't seem to have the same size. That's because we are on a log scale. Actually, they do have the same size. It's just a log scale, and log scale messes. Does something with the percentages so that you see the same percentage between here and here, then here and here, but it changes the span of the percentage. So it transforms the symmetric, but it makes look, if you have an algorithmic scale, then you have wave 1, 2, 3, 4, and 5 is extreme because it's not a log scale. And if you go to a log scale, then you have a wave 1, 2, 3, 4, 5, and you can do some channeling. So we normally use log scale because it's better for Elliott wave analysis. And if not, the fifth wave looks just huge compared to wave 1 and 3. And that's why you use the log scale. But when you use the log scale, then the rectangles that you have here and here, and then when you put it down here and here, doesn't appear to have the same size. This one seems longer than this one. So it's just the difference between log scale and arithmetic scale. But this is log scale, and both of this triangle, even if they don't look to have the same size, actually have the same size. Okay, that's not so important, but So now we have to see if we are in if the bearish count will be our favorite count. Then we have a W here, an X wave here, and we are accomplishing right now the Y wave. And that could get us down to 36,869, as I put it here. That would be our target for the bearish count. The thing is, I can't be sure that the bearish count is not in play, because the two can just be moved over to here, you see, or a little far. So I cannot be sure that the bearish count is in play until our level 39,573.21 gets violated, and that level is also our stop loss level. So because why did I put my stop loss here? That's because as soon as it gets violated, my bullish count is not in play anymore, and I have to switch to my bearish scenario. So I hope I could tell you the difference between both of them. Let's take a look. Right now, we still did not violate our levels here. So I can say that my bullish scenario is actually over because we haven't violated both of those levels. But I don't like the count in this wave. I mean, there should be an A, B, C, and the C should subdivide into 5 waves. But this just is a really messy pattern, and I don't actually see 5 waves in it. I did put them on because I have to, but I don't see them in it. So I have no confidence that this correction is over. And I would not be surprised if both those levels break in the next couple of hours, during the next couple of hours, the next session of trading. So maybe tomorrow I can tell you that the bullish case scenario is out of the window, and that we switch to the bearish case scenario. In that case, I'll take off my chart the bullish case scenario and only show you the bearish case scenario. So I have to do some relabeling until tomorrow. Okay, that's it. I hope I was clear enough with both of those scenarios. And we'll see where we are tomorrow for one more trading update for our new session. Don't forget to like, subscribe, and hit the bell notification, because it's time-sensitive information and you should get it as soon as it's out. Thank you, and see you tomorrow. Have a nice day. Bye-bye.